Welcome. In this explainer, we are going to be decoding a really crucial part of the new Income Tax Act 2025. We're talking about Section 11, the part that tells you which incomes are exempt from tax. Let's get right into it. So, here's the big question on everyone's mind with this new law. You earn income from all sorts of places, right? But does every single rupee you make get counted when it's time to pay taxes? Well, the short answer is nope. And the reason for that nope comes down to one key provision, Section 11. You can think of this section as the official rule book for figuring out which incomes you can legally leave out of your final tax calculation. This makes it, a cornerstone for any smart tax planning. So here's how we're going to break it all down for you. We'll start with what Section 11 is, then get into the legal details. After that, we'll look at specific exempt incomes, walk through a case study, cover compliance, and finish up with the key takeaways. Okay, first things first, let's start with the basics. What exactly is this new act all about, and where does Section 11 really fit into the bigger picture? All right, a little bit of context here. The Income Tax Act 2025 is a pretty big deal. It's set to kick in on April 1st, 2026, and it's basically a major rewrite of our tax laws. The goal is to make things simpler, but that means we've got to understand the new provisions inside and out. Now, before we talk about what income is out, we have to be clear on what it's being taken out from. That's where total income comes in. This is the magic number, the final figure you pay tax on, but only after you've applied all the deductions and exemptions you're entitled to. And that brings us right to the heart of Section 11. Its entire job is to act like a filter. It lists specific kinds of income that legally are just not part of your total income to begin with. It's almost like that income is invisible to the taxman from the get-go. All right, so let's get into the mechanics. How is Section 11 actually built, and where does it get its authority from within the Act? The interesting thing about Section 11 is that the section itself is quite short. It doesn't actually list out all the exemptions. Instead, it works more like a signpost, pointing you to different schedules in the Act where all the detailed rules are hiding. It's the key that unlocks several different doors. And these are the main schedules it points to. Schedule 2 is the big one for general incomes. That's relevant for most of us. Then you have Schedules 3, V, and 7, which are more for special cases like certain individuals, investment funds, or even entities that are totally exempt. For today, we're going to focus on Schedule 2. Okay, so let's get to the good stuff. What income actually gets a pass under these new rules? Let's break down what you can actually exclude. We're diving head first into Schedule 2 now. This is where you'll find the exemptions that you, your clients, or your business will probably run into most often. These are the rules for your day-to-day practice. All right, two really big ones right off the bat. First, life insurance policies. Now, there's a huge new rule here for policies issued on or after April 1st, 2025. The maturity payout is only tax-free if the aggregate premium you pay in a year across all such policies is 5 lakh rupees or less. This is a big shift, clearly aimed at stopping people from using insurance purely as a tax-free investment vehicle. Then there's provident fund interest. The exemption here is also capped. The interest you earn on your own contributions is tax-free, but only up to 2.5 lakhs. That limit does jump to 5 lakhs, but only if your employer isn't contributing anything. And it's not just about insurance and PF. Schedule 2 has other important exemptions too. For example, any payout from the Sukanya Samriddhi scheme, that's completely exempt, which is great news for those saving for their daughters. Similarly, certain payments from the NPS trust and the final accumulated PF balance are also exempt. But, and this is key, you've got to remember, all of these come with their own set of conditions. Always check the fine print. Okay, that's a lot of theory. Let's make it real. A quick case study is probably the best way to see how these rules actually play out in the real world. So let's meet Anika. She's a consultant. She's got her regular professional fees, which are of course taxable, but this year she also got a big payout from a life insurance policy that matured. Now this policy was issued in 2025 and her total premium for the year was 4 lakh rupees. So what happens? Well, because that 4 lakh is under the new 5 lakh rupee limit we just talked about, the entire insurance payout is not included in her total income. It's a perfect, clear-cut example of the rule in action. Knowing the law is one thing, but actually applying it correctly without tripping up, that's the real challenge. So let's talk about compliance and some of the common traps to avoid. Look, for any professional out there, if there's one thing to take away from this slide, it's this. Exemptions aren't a given. They have to be earned through compliance. The biggest don't just assume an amount is exempt. And the most important keep records of everything. Policy documents, contribution statements, because if you can't prove you met the conditions, you can't claim the exemption. It's as simple as that. And here are some of the classic mistakes we see all the time. People getting the start date wrong for the new insurance premium rules. Remember, it's April 1st, 2025. Or messing up the calculation for the taxable portion of PF interest once you go over the limit. And, of course, the big one, just not keeping the paperwork. Seriously, documentation is your best friend here. It's the fastest way to have an exemption disallowed if you don't have it. We've covered a lot of ground, so let's boil all of this down to a few clear, actionable takeaways that you need to remember. So, let's recap. First, Section 11 is your starting point for any tax-exempt income. Second, and this is so important, exemptions have strings attached. There are always conditions and limits. Third, for individuals, the rules have really changed for life insurance and provident funds, so pay extra attention there. And finally, number 4, document everything. The fine print is what matters, and having the proof to back up your claims is absolutely non-negotiable. And that's our deep dive into Section 11. I really hope this explainer has clarified this important provision of the new Income Tax Act. Thank you so much for watching. And hey, if you found this useful, please do like, subscribe, and share. Just a quick and important reminder, this explainer is for educational purposes only and is not professional advice. Tax laws are, of course, always subject to amendments. So please always consult with your professional advisor before you take any action based on the information here.